Thank you, Mr. Chairman, and it's good to see you again here, Chair Yellen. It's also good to see people here from across the country, people who are fed up. I know that as chair, you have done a lot of outreach, but seeing people here who've come in from a lot of different places are a strong reminder that every Fed decision affects every person in this country. And the Fed has plenty of opportunities to hear from giant banks. It's good to hear from real people and get that reminder. So thank you. Now, I want to go back to another question here. As you know, Dodd-Frank requires giant financial institutions to submit living wills. These are the documents that describe how that these banks could be liquidated in a rapid and orderly fashion in bankruptcy without either bringing down the economy or needing a taxpayer bailout. If the Fed and the FDIC find that those living wills are not credible, the agencies can take steps to reduce the risks posed by these banks by imposing higher capital standards, by lowering leverage ratios, or by breaking up the banks by forcing them to sell off assets. A year and a half ago, in August of 2014, the Fed and the FDIC identified several problems with the living wills submitted by 11 of the biggest banks in this country. The FDIC found that all 11 of those wills were not credible, while the Fed agreed about the problems, but then refused to make any determination about whether the wills met the legal standard about credibility. In other words, the Fed didn't say they were credible, but the Fed didn't say they weren't credible either. Now, that mattered a lot because it's only a joint determination by the agencies that has any legal force. The Fed's refusal to call the plans not credible meant the agencies couldn't use statutory tools to push these risky banks in the right direction. So I want to start by looking back at that decision by the Fed. The FDIC stands behind insured deposits. So its main mission is to stop bank failures before they happen, so taxpayers won't be on the hook for some kind of bank failure. Of all the regulators, the FDIC has the most expertise in liquidating failed banks. So if the FDIC found that the bank's liquidation plans were not credible, and the Fed agreed with the FDIC on the basic problems with each of these plans, why did the Fed refuse to join the FDIC and designate these plans as not credible?
Well, looking back to the decision we made last year, we had set out in the guidance pertaining to these living wills that we expected to go through a few rounds of submissions to clarify it's a completely new process, and we felt the banks needed to understand what expectations were in terms of what we wanted to see. And we felt that we had not given sufficiently clear guidance to make the decision at that time. We worked very closely with the FDIC. As you noted, we have given detailed guidance to these firms about what we want to see in this round of living wills. We are spending a great deal of time. We have had 7 full board meetings so far since August to discuss and work through these living wills. We're working closely with the FDIC in evaluating them, and we did make clear, and it continues to be the case, that if this round of living wills doesn't, a living will doesn't satisfactorily address the shortcomings that we identified last year, that we are prepared to make findings that a living will is deficient.
Okay, so let me go then to where you're going here. The FDIC already thought that the facts established that the plans were not credible for 11 of the largest financial institutions. In August of 2014, the Fed and the FDIC required those 11 firms to resubmit living wills that addressed the problems they had identified. And the firms resubmitted their plans last July. And as you say, it's my understanding that you're just about finished reviewing those plans. So once again, I want to underline, only joint determinations by both the FDIC and the Fed will carry the force of law. So can you say today that you will work with the FDIC to ensure that the agencies issue joint determinations of credibility on each of the 11 living wills that were resubmitted?
We are working very closely with them to evaluate these living wills.
Well, I assume you did that last time, that you worked closely with it, and I think that's what you said in your testimony.
We did, and we wrote joint letters to these firms, and we will certainly try to do that again to identify shortcomings that the living wills have and further steps that we want to see. It is up to each member of the Board of Governors and members of the FDIC board to, we're charged with arriving at our own individual judgments as to whether or not these living wills are credible or facilitate resolution. And I cannot guarantee you that we will arrive at identical conclusions.
Okay, fair.
We're certainly working. We've each been, vested by Congress into making a judgment based on the merits.
Okay, if you can't ensure that the agencies will issue joint determinations, which is how we get to the effect of the law, let me ask if you will make another commitment, and that is, will you at least commit that if the Fed finds a living will credible and the FDIC does not find a living will credible, that the Fed will issue a written public explanation for why it is reaching a different conclusion? It seems like that's the least that the Fed can do to help the public understand its position.
Well, my expectation is that we will release the letters that we send to the firms giving our evaluations of their living wills.
So you will be explaining, if there is a difference between the Fed and the FDIC, you will be issuing a written statement about why the Fed decided something was credible that the FDIC found was not credible.
Well, I want to be careful exactly what I say about this.
Good.
We expect to send letters. Hopefully they will be joint letters. Hopefully we will be able to agree on what the shortcomings are of the living wills and what further if either agency finds that they're not credible, we need to identify specific deficiencies that we wish to see remedied. And my strong hope and expectation is that we will arrive at joint agreement with the FDIC on those deficiencies and release letters that explain what we find them to be.
Well, I very much hope that the Fed and the FDIC are on the same page. That's the only way we get the impact of this law. You know, living wills are one of the primary tools that Congress gave to regulators to make sure that the taxpayers will not be on the hook if another giant bank fails. And it's critical that the Fed use this authority, like the FDIC has been willing to do, to make our financial system safer. Thank you.
I agree with you on that, and we have been working with them all along through our supervisory process as well, which is separate, but we're also emphasizing recovery planning and resolution through our supervision.
Thank you. Thank you, Mr. Chairman.
Senator Ward.